So Jim Cramer today said one of the dumbest things that he's ever said. Now, considering that he's made calls such as telling people to put everything into Meta June last year before it dropped over 75%, that's saying something. Today he said we should thank Gary Gensler for denying Bitcoin spot ETF applications. Now, I've written about this extensively, why this is dumb, but I want to be really clear. It is monumentally dumb. You can today buy GBTC in a brokerage account. No problem. This is TD Ameritrade. I could easily buy it. I bought some already. I don't need to push the button, but you can see that it's buyable. That asset is a closed-end fund, and Grayscale's application was able to change it to an ETF. So what's the difference? A closed-end fund can trade at a premium like it did for years under the SEC's watch, or it could trade at a discount. And that discount, when it goes to a discount, means investors lose money if it goes from one way to the other. So that's allowed. He approved a Bitcoin ETF that trades on futures, which can have tracking error and cause money to be lost by investors just by buying it, even if the asset doesn't go down. So oil, which is more or less flat since the USO future-based ETF was approved, that ETF is down over 90% since inception. This is what Gensler has allowed, but he won't allow a spot BTF. And if you converted Grayscale to it, people would be able to buy it basically, at the asset value of Bitcoin. So without those percentage differences, that's a massive difference. Second thing to keep in mind is his reason. Gensler's reason for wanting to deny the ETF was that you could do better with futures and it would not be manipulated. Well, that's insane because the futures trade based upon the spot price. They're 99.999% correlated. So obviously if spot was being manipulated, then futures would be just as manipulated. The fact that it didn't happen in the CME wouldn't matter. But the other point that is really important here is Gensler and Cramer and the other idiots in the media ignore the data that goes underneath Bitcoin. So if you look at this screen, I can, at any point in time, hit calculate. And what is this showing me? This is showing if I wanted to buy $5 million worth of Bitcoin at any instant. Right now, the offer is $22,294, and I could buy $5 million at a price, an average price of $22,325. Well, you could do that math. That math is like 0.1% of an offer. If I wanted to sell $5 million, what you would do is you would sell $5 million, and the bid, and it's obviously running to the upside now, is $22,362, and you could get it done at $22,315. That's actually wider, but that's mostly because it just started gapping up as we were doing this. It's still, 50, it's still 0.25%. So that basically you're talking about somewhere of a bid-offer spread for $5 million of an asset, which is the full ETF create-redeem size, of less than 0.5%. Virtually almost all of the ETFs that have been listed, other than the S&P 500, have spreads in the underlying that are wider than that. So the Bitcoin ETF would actually be tighter, with full depth markets that are totally auditable by anybody who wants to subscribe to those feeds. The fact the SEC doesn't isn't our problem. They certainly could, because here at CoinRoutes we do. More of this could be talked about later, but I think that makes the point.